Well, Green Dragon is the biggest and the only independent gas company in China, and it's also just moved from the London AIM market onto the main market as well. We're joined now by the founder and the chairman of Green Dragon, Randeep Grewal. So how's it been going for you since you've moved to the big market? A change of perspective perhaps, looking at the future and growth?
It's been very busy. We are, as I tell everyone, we're a small but very busy company with ambitions to be a fairly large operation, exclusively in China. We were on AIM for 8 years, and just most recently, about 2 weeks ago, moved up to the FTSE 250. So we're very pleased to be on the main market in London. And already in the last 2 weeks, we've raised our first public bond for $88 million US. And wouldn't you know it, within a week, we'll have 10 rigs running in the field, utilizing that capital and drilling lots of productive gas wells. And that's the speed that you'll see Green Dragon going from this point forward.
Now, here at the Oil Council, a lot of focus on the oil price and production and so on, and obviously your gas, but nevertheless the oil price is a factor for the gas industry. What does it mean to you as we see it going lower?
It's a factor for those that play in the capital markets, have to deal with transportation. They produce in one country, sell to another country. For an exclusive domestic producer like Green Dragon, we don't really care what Brent does. If Brent drops from $100 US down to 25, it won't impact us at all. And there's a very important piece to that statement to understand. Ultimately, the Chinese central government has implemented some fantastic policy. And these policies are all about national independence to the energy component, which they have been handicapped with in terms of importing energy all the time. So in this particular case, the pricing that we have is regulated prices from Beijing, from the central government, who has decoupled those prices completely from global market commodity pricing. So essentially, what happens to Brent does not affect us. What actually affects us is steady, stable, consistent policies that I've seen for the last 2 decades working in China, which are consistent. So we know today that our gas prices that started in our current 5-year plan back in 2010 at $7 an MCF at the wellhead will exit next year at $9.30 an MCF. And if you look at that 5-year term, gas prices globally, oil prices globally, have gone up 30%, down 40%, back up 40%. Doesn't really impact us. We're completely decoupled. So we work in an environment where national policy provides the stability for us to do what we do best, which is get the gas out of the coal and not worry about capital markets playing a psychological game on commodity prices. We just ignore it.
But so in that sense, you're decoupled from the concerns that the rest of the industry may well have. But what about the issue that's been certainly exercising the minds of the G20 about growth slowing globally and China's growth still impressive, but it's beginning to get to slow. Can you see that the position that you're in persisting despite the fact that growth appears to be slowing quite sharply in China?
So I think when we talk about growth, the magical word is growth. The fact that it slows from 8 to, let's say, 6%, people are thinking it might be 7.5. Let's say GDP growth drops to 5%. What that does for a domestic producer like Green Dragon is essentially nothing. Makes no change whatsoever. People that get impacted may be those exporters that are trying to export into the market. We are the market. We are domestic. We're onshore. Our consumers are going to consume that gas no matter what happens. What might happen is that if GDP growth slows substantially, you may see some pushback on LNG coming into the country. You might see those expensive gas molecules get pushed back. Won't make any difference to Green Dragon whatsoever. So neither the growth nor the pricing has any impact to us whatsoever.
So longer term, what's the outlook?
The outlook is that we have 25 TCF of gas in place. We've just put on production our first 10 BCF coming out this year. We expect that 10 BCF to be more like 18 to 20 BCF next year. Our outlook is very organic. We have 7,600 square kilometers in our production sharing contracts that are still good for another 20 plus years. Our outlook is very organic. Drill, drill, and drill. Get that gas online for a domestic consumer in China at commodity prices that are unmatched globally.
Randeep Grewal, thank you very much indeed for joining us, the founder and chairman of Green Dragon.
Thank you for having us.